Hi, everyone, and welcome back to another Brooks Trading Course weekend market update. My name's Tim Fairweather. I'm a professional price action trader, and today we're going to cover the FTSE 100 Futures Index. So let's check it out. So in this video, I'm going to have a quick look at the monthly chart. We're going to focus on the weekly chart and the daily chart. And then as a bonus at the back end, I'm going to go through the higher time frames using some of the drills you might have seen on my YouTube channel, just to show that price action is fractal. And if you do any of these drills on any time frame, it's going to benefit every instrument on every time frame. So let's start with the monthly chart. So here's the UK 100 FTSE index. I've got a 20-bar EMA and a 200. You can see we're in a bull channel. We've got a couple of legs up. Last month, we had a bear inside bar. I said there was this highest high one, traders could buy on a stop one tick above that bull bar. This is a disappointing follow through, but it's still a bull bar. I don't think there's any reason to get out. We can see now we've got a bear inside bar. Some traders might have got out above that bear inside bar, but I think because we're still above that prior high, we're above the breakout point. So there's really no reason to sell down here. If price does get down there, I'll be looking to add to my position because at the moment we've got another strong breakout. And as long as breakout gaps are open, particularly with the body gaps, I want to be long the FTSE. Bears would like this to close as a bear bar, but I still wouldn't be interested in selling down here. So onto the FTSE weekly chart. So the heading I've got is inside bar double top, tight trading range at the moving average. So some real squeezing compression in here, all-time high. We're just below that. You can see I've got that monthly stop entry just above. We raced up towards it to let the stop entries out above that bull bar. You can see we went one tick above that bull bar. If a trader was stuck, they've had many options to get out, so they're not trapped there. There are no bears that are trapped here. You could argue below this bear bar down here, but I usually only look at stop entries in the direction of the trend. This is not in the direction of the trend. We're in a bull trend. So I'm less interested in the sells at the moving average down here. So the bulls want, this is a spike, a couple of legs down, looking for a breakout of this trading range, maybe a failed breakout below and then more higher, or just directly sideways to up. So the bears actually move the price down considerably. They might see it as a two-legged pullback for more down. At the moment, this is an inside bar. This is a bad short below there. If bears do get a follow-through bar, which looks good, and we come back to test, a lot of bulls might get out below there. But if you look to the left, you've got to ask yourself if entering a short below where most traders were buying on a higher time frame is a really good idea for a swing. Let's fix that color up. That's a little bit nicer to look at. So like I said, before, these stop entries got triggered. Can you look at this as a double top? We've got a double top here. We've got an attempt at a double top here. We've got an attempt at a double bottom here, down here or down there. That does make sense. There is a gap on the daily chart somewhere down there. But as I said before, I'm not willing to swing short at the moment. I don't think enough bulls are trapped. I think there's too many bull bars closing above the moving average. And all these bars are reversing on the open. So I don't want to get stuck with a stop entry. If I can't use a stop entry, I need to use a limit order entry, at least in my style of trading. So my first sell has to be above a bear bar. So actually the first limit order sell got triggered, but I think those traders are going to scalp anyway. So that's my view on the weekly chart for FTSE. So I think we're still always in long. I don't think we took out any swing points, as I said several weeks ago. We haven't got a new high. We're sitting in this range. Some traders can be short. Some traders can be short with a stop above there. Some traders can be long with a stop down there. And at the moment, we're sitting in the middle. Anytime we get too low, traders scale in. Anytime we get too high, traders scale in. Expecting sideways to up next week. Okay, what about FTSE on the daily chart? You can see that tight trading range breakout mode on the higher time frame. It's a little bit harder to look at, and I'm not surprised if you're not interested in trading the daily chart. It's been really climactic, but there has been some good swings. What I'm going to do is I'm just going to zoom in a little bit here, make it a little bit easier on the eyes. So I've got a couple of markings. So if you think about this bear bar, traders got stuck, and traders that were buying down here were betting that these traders are going to have to scale in higher. So they're buying to try and get 2 to 1, 1 to 1 up here. Now, the traders did not get all the way to their swing. I think they got back out at 1 times risk reward, and they're not looking at buying until we go below a bull bar. Maybe we attempt to break out down here or down here. That makes sense. What do you do if you're a bear? Well, I thought more traders would sell above that bear bar, but I don't think you're going to do that unless you can also sell above this bear bar. You might even be selling more above that bear bar. The point is, you're betting that this range is going to fail to break out. So you don't really care about all this overlap. You're just waiting for an opportunity to enter at an extreme, betting it's going to be an overlap. What does wrong look like then? Well, we break out to the upside, leave a gap, and keep going. So at that point, you now need to abandon that trade and flip. Now I'm looking at what the bears are going to do to the short side. I think the first limit order buy is here, which means the scaling for that buy is down there. That's that open gap I was talking about before. So traders selling in here, maybe selling above that bear bar. That was actually a really good short. I missed that on the daily chart. I was trading DAX that day, and that was a really good short. I like that one. 4 bear bars down, pause, 1 more bar. Betting bulls are not going to buy here. They're going to buy a little bit lower. But now you've got a very small entry bar, and it's closing right at support. And it's actually closing right in the middle of all this. So a couple of options for Monday. That is, it just instantly reverses. You can see we've had a lot of days where big bear bars close on their low and instantly reverse on the open. The other possibility is this gets followed through and then we go a bit more sideways. Do I think it's going to be a big bear bar down, breakout gaps and go below here? No, I don't. I think higher probability we're going to go sideways. So any profit that these traders get, that's the stop. If your stop's up there and you're selling here, you need to get it down to break out below that low, but I think traders are going to be disappointed, but probably sideways to down, at least on the daily chart, to see what's going to happen below those lows. Now, if you're familiar with my other videos, you know I've got a number on spikes and high ones, breakout, follow through, higher time frames, measured moves. And so what I'll do is I'm just going to quickly show how you could have used it on the higher time frame. Well, here is a strong bull spike. If this is going to fail, the target is down there, but it hasn't failed yet. So as long as the market is finding buyers along the bottom of that bull spike, the target is still above. But if you were long in here looking for a high one, you never really got a good buy entry. That was a weak signal bar. You got a chance to get out. Now you've got a strong bear spike down. So you're looking for a pullback and a sell signal. That's your first sell signal here. So we draw a line under that. Then you've got another pullback and a second sell signal here. So now you've got a line under that. You could also sell the close of that bar. And what do you notice about all the price action that happened over the next few weeks? Basically, we just came back and kept testing all those prices. We never gave a lot of these traders much profit in these first few weeks, but eventually, if you drag that price along, what do you notice? Eventually, these bears did get a swing sell. If you didn't take that sell, instead you took the low 2, you can see selling below that bar did not give you 2R. And that's why I said a lot of traders will sell the close of that bar because it's so weak, okay? You can see there's a lot of buying into that bar. So if you imagine now that both bears that sold these low 1s and low 2s all got paid 2R, what's next to come in the price action? Here's another bull spike, that bull spike flips. Here's another bull spike, that bull spike flips down. But the biggest spike on the chart is actually this one. And that's why it's putting a target way up there. And that's what I think higher time frame bulls are trying to do. We are oscillating around this line. You see how important this line is. And that's because if this is going to flip and go all the way up for a measured move, anything that's in this lower third is a great place for a swing buy. You can see a lot of signal bars as well keep appearing on this line, and traders are going to keep buying them. This is the first time we've dipped below. So if this is going to fail, how's it going to fail? Any trader that's buying there has a stop down there. And I think there's going to be a whole bunch of buying in this area where traders say, hey, I can buy there. I can buy more there. I can even buy more there, betting that this is not going to get a strong breakout. If it does close below there, I exit my position and then I look for the next trade. But at the moment, all these bulls are still in, their stop's still there. But if you look up, any bears that had their stops up there have had their stops run. So that's why I think in the short term, any of these pullbacks is just going to get bought because you're relying on bears to have a stop all the way back here, which I don't think is reasonable on the daily chart. There's just too much action that's happening. And that's my analysis for the FTSE 100 for next week. Thanks very much for watching. If you enjoyed this video, I'm sure you'll enjoy the videos of my YouTube channel where I talk through day trading practice drills that can help you become a better trader. If you're part of the Brooks Price Action Trading Room, I'll see you live trading during the week. Otherwise, I'll catch you next weekend. Thanks very much for watching.